August, 6 days we have scheduled. Today is the third day of the event. And recordings also we have given in our YouTube channel. You can see those recordings. So as per the schedule decorum, so we have started with the GAN trend reversal date we have given you in the very first session. Then how to use honesty software along with the option hedge, that also I have explained. So intraday trade in options, today I'll be explaining. So how you can do intraday trade in option. Intraday top and bottom also we have explained. Option strategy testing tool also we have explained. Today also I am going to explain it again. And calendar spread, one we have initiated, that calendar spread performance also we can see today. So these are the things we are learning this entire 1 month period. 2 days are gone. So remaining, today is the third session and market is now negative, and 9:30 only I will be starting the session. So have a look at the GAN trend reversal date. So GAN trend reversal date is one of the trend reversal date falling today. Today 12th of August is one of the trend reversal date falling as per multiple methods. So 15th is a holiday. So as per the trend reversal date, whenever there is a fall in a holiday, the before date, the date preceding or the working day preceding the holiday, or the working day succeeding the holiday will be the trend reversal date. So that impact you are seeing today. So today 12th you are seeing as per the high angle. So same process, if I can go for the price time method, this is also a major trend reversal date. So this two also falls on today 12th. So 12th is again is a trend reversal date by price time method, by high angle method. Both are the major trend reversal dates. So this is the major trend change date. So today you are impacting, or the price is getting impacted by the major trend reversal date. So there was a gap down opening. Yesterday it was a positive closing of 120 points. Today there was a gap down opening by 5 to 6 points, and you are seeing that now 30 point negative. So opening basis, the trend reversal is being honored by the market perfectly. So there are two methods was giving a trend reversal day today. So as per this method, if you have initiated the trade yesterday, then today is the day you should book the profit. So here pricing analysis is not important. So based on the trend reversal date, if you have initiated a sell trade yesterday towards the closing hour 3:15 to 3:30, then this is the time that you can book the profit. So this is as per the trend reversal date. This is working perfectly today. So now we will be going for the other studies. So here trend reversal date, what we have discussed in the day 1. So that I am validating today. So this is the as per the GAN trend reversal date. So here the today's session I will be discussing about the trend analysis, how you should initiate the trade in the Nifty and Bank Nifty. Followed on, so Prem will discuss about the option strategy. One of the option strategy we are going to initiate today, covered call strategy with wide leg bear spread. So this is one of the strategy. So 22 best option strategies I have authored in my book, Master's Key to Futures and Options. This is one of that strategy. So Prem will discuss about this strategy, what is this strategy, how to initiate in our option strategy software. So, and further to clone this strategy, so how it has performed in the earlier month, that also he will be showing. And coming back to today's intraday top and bottom and validity of the monthly top and bottom, that Gautam is going to explain. So this is how the sessions flow will be. So will be 9:30 is the time. So we have different tools here. We have given a weekly options. This is a specific tool for trading in the weekly options. So only for weekly options you can utilize, individual options you can utilize here, and option scanner we have given. So this is a fantastic tool which can give you the strikes which is most appropriate to trade today. So I repeat it again, option scanners best use is it will give you the strikes which will be appropriate to trade today. Either you buy or sell. So how to use this tool? This is an excellent tool and you can just click of the mouse. No need to hunt for the which strike to trade, how to trade and all. If you have lot of confusion, then just hit on this tool, load the data. Once the data is loaded, it has many options, IV rank, IV percentile, max pen, Nifty max pen, weekly, all things is there. There is an option called all. You analyze all strikes. So here you can say that all tradable calls and puts of the monthly options are got loaded. So definitely I will be in the confusion which strike to choose. I will be, suppose if I am a call option trader, I will be hitting on the call. So I will be choosing the last option between. So once you hit here, you will get some 6 tabs enabled for you. So if you take it out, so you can say if you go for the put and here, so one group of tabs will be enabled. If you hit here, another group of tabs will be enabled. So same process, if you go for the call and between option, you will see some tabs is getting enabled. So strikes between the buy entry and targets means today the strikes which will fall between the buying entry of the Nifty and its final target. So those strikes it will filter out. So we will get only 4 strikes. So these 4 strikes will have the lesser theta decay. So theta decay means time decay will be lesser. So these 4 strikes are only applicable for trading in the options. So for the option buyers, so strikes between buy entry and target. So these are the strikes best suitable for buying for today. So either of these strike you can choose. So here it is telling that current premium based on which the calculation is being done 192. You can buy at 207. Once the Nifty spot, this is we have clearly mentioned underlying price is Nifty spot. So Nifty spots crossed 17,643. That time only you should buy. So the either of these things 207 or 643, anything comes past, you will be entering the trade. So you will be buying the 650 call option only at 207. Keep a stop loss at 177.71 or 178, and these are your targets. And once again I am telling all these levels, Nifty levels what you are seeing in the top are the Nifty spot levels. Suppose you can see that Nifty is at now 17,600. So I have nothing to do if I am a call trader. If I am a call trader, I have nothing to do. I will be waiting for 17,643 to buy any of these strike call options, or I will be waiting for the 17,587 Nifty spot to break, so I can sell these call options. So similar way, if you want to do the put trades, hit on the put, select the between, and here strikes between the sell entry and targets. So it will tell you which are the strikes best suitable for the trade today. Today, which strike you should trade in the put strikes. So here, if you are put, you are going to buy, you should buy it here. So buy it here, and if you are going to sell the put, you should sell it at 101. So these are the things also. This is a thing you have to utilize if you are using the option scanner. Or individual tool also is there. Any strike of your choice, you can able to analyze and do the trade. That is also you can do. So keep it in mind. Only Nifty spot 17,643 above call need to be bought. 17,587 below the put should be bought. So the suggested strikes we have given you, but any strike of your choice you can do. But these 2 Nifty spot price need to be kept in mind before you initiate the trade. So this is how you should, if you do the option intraday trade, definitely you will get benefited. So these two levels you have to keep in mind. Keep in mind and do the option trades accordingly. So today 9:30 I am moving to the Nifty analysis, Nifty future analysis I will be doing here. So I am not erasing this value 17,643 and the 17,587. This is the entry levels of the option trader. Option trader will buy the call option once the Nifty crosses 17,643. Option trader will buy the put option once the Nifty spot fall below 17,587. This is what we have discussed, and now this is what we are getting. This is what we are getting, and this is telling Nifty is in the downtrend. One must sell Nifty at this current price. It is highlighted here. Your future is between 643 to 630. So this is the price range in which the Nifty is trading. You can see here 630, 36. So we are very much in the selling zone. We can sell Nifty now. We can sell Nifty now as per this analysis. We can sell Nifty now and hedge it with 17,650 call option buy. Call option buy. So this we can do if we are future buyer. So we should buy the future only above 17,710. Now the future is signaling for selling because the price is between this 636, 17,636. We can sell future along with a 17,650 call option buy. So this is how you can hedge the future sell. So first target will be 618. If this breaks, then 600 will be 17,600 future. Future will be a level. Once these two levels gives you the breakdown or breakout, then 17,588, 550, 509 also can come. So decay cluster is setting at 609, 17,609. That is the optimum support for the day. If that is broken, then the possibility of 550 or 588 is bright. So this is for the Nifty intraday trade. Nifty intraday trade. On Nifty intraday trade, you will be doing using the one standard deviation and option hedge. Now Gautam will explain you the intraday top and bottom and how to use it.
Now we can go to intraday top and bottom for the Nifty. Now market it is in the downtrend. So here the first cycle of the bottom will be 17,515. If the volatility is high, it will achieve any of these targets.
Higher.
First cycle of the top, it is 17,854. If the market is reverse, it will go to here, first cycle.
So this is the top and bottom for the day, 17,515, 17,854. If this bottom or top is giving a breakout, this first cycle top or bottom giving a breakout, then on that day, third cycle is not important. Directly we can aim for the fifth or seventh cycle. So why it is important? Sometimes the market volatility will increase or decrease. Sometimes you will get a deep target. So now we are seeing the levels. We are seeing that okay, 509 we can expect. However, if you compare between these two things, suppose you sold the Nifty and you have achieved 17,509. However, many will exit from here. But if you know the bottom here, the bottom is broken, 17,515, it is broken. So once this bottom is broken, some deeper levels you will get. So no need to hurriedly come out of that from that trade. Better wait for some time and get some bigger targets. So that is the point of mentioning this intraday top and bottom. So now he will also take about the monthly top and bottom what we have discussed. So this is what we have taken. Go for the trailing one.
Tool for Nifty monthly top and bottom using the VIX. VIX is nothing but the volatility index of the Nifty option prices. So now we can see with the time reference for previous month. Uh, Already we have achieved this high target top. Already it has achieved already. So we are going to see a trailing 1 month. Trailing 1 month means calendar date of previous 30 days. Yeah. It is recommending the top for 17,778.
0.96, it is 79.
Uh, Now it is now Nifty is around 17,642. Okay.
So this is the top for the monthly top 17,779. So we have not achieved it. So from here the reversals are expected, and the reversals, if it is happening, then we can see these reversals till 500 it is possible. So 17,498, 17,422, these are the things is achievable. However, as of now, the top is 17,779, which is intact till date. Till today, it is intact 17,779. So this is the monthly top for the August month. So if this top gives you a breakout, means if it is price is moving above this, then there will be a new fresh calculations which can give you a renewed top, a fresh top. So here, as of now, 17,779 is the top, and we have not achieved it. We have gone to 700 and plus, but we have not achieved it. So this is for the monthly top, and for the Nifty. Now I am going for the Bank Nifty. So here Bank Nifty, I am loading the data. Intraday levels we can see. So Nifty we have sold into, and this is the Bank Nifty also is in the selling target. So here, so Bank Nifty 38,819, 38,819. So 38,819. So this 816, 819, that level is there. So it is suggesting us to sell here. We are at 799, but Bank Nifty entry has to be made at 0.38. 800 below only we can enter the things. 0.38 to level only we should enter the Bank Nifty. So Bank Nifty must be sold at 38,800 below or less than 38,800 or 38,000, as per the calculation 38,791. This is the place we should sell the Bank Nifty, and if you are selling here we must hedge it with 38,800 call options buy. So this is the simplest hedging technique. Simplest hedging. So don't think that this is the only one hedging technique. You can able to sell option also. I'm telling you only to buy the options so that you will have a lesser margin requirement, and you can, this is also classified to be the simplest hedging techniques. 38,792 level we should sell, along with a 38,800 call option purchase. So this is what we need to do. So here, so we have to wait for that proper levels to come. Once it is coming that level, we can see once that 38,792 level, if it is coming. So 94 also has come in between and gone. Now 38,792 level it should come, then we can achieve that. So now going for the intraday top and bottom for Bank Nifty.
Now the bank.
So now he will be explaining you about the intraday top and bottom.
This is for the Bank Nifty. So now Bank Nifty at around 38,820 levels. So here the bottom of the intraday will be 38,644.54.
So 45, round it to 45.
If the trend continues and volatility is high, it will achieve the 5th or 7th cycle.
So for the day, top is 39,242 intraday top, and these are the third, fifth cycles. But here monthly top and bottoms you cannot able to see for the back Nifty, because to know the monthly top and bottom you require a VIX volatility index. Except Nifty, none having the VIX index, like volatility index is only for the Nifty. Back Nifty it is not having. So positional trades are because these positional trades, if you are doing, you have to select that option of positional. You have to give minimum 2 days time. So maximum you can go for the 7 days, because 7 days after the volatility cycle changes. So or 10 days you can maximum give. So if you can give for 2 days or 3 days or 5 days, any number you can give, but maximum 10 days. So here 2 days if I am doing it and calculating the levels, so it will be telling you the bank Nifty levels here 39,000 above we should buy. This should be the targets for the next 2 working days, and 38,632 below we should sell, and this will be the target for the coming 2 days. So this is how we have initiated for today, and all these analysis are recorded and kept it in the cloud. So whatever the analysis we did, so it is being kept in the cloud. Any moment we want, we can retrieve it and see that what calculation we did. So we did for the bank Nifty intraday and positional, we did for the Nifty intraday. So all these transactions are recorded. Whenever we require, we can able to retrieve that. So now moving to the option strategy. So Prem will be explaining you about the option strategy. Let the trades to mature. So here we have sold Nifty, we have bank Nifty, we have waited for the selling. So we have sold the Nifty, and it is also with hedging 17,650. Call option is being bought along with the selling things, and that too also I have told you here how you can, for option entry based on the option scanner, we have taken that 587 below we should be a put buyer, and 600 and spot 647 647 or 50 odd, so we have to be a call buyer. So this is what we have discussed. Now I'll be moving to the option part option part, and anybody having any query can put it in the chat box, and we'll attend it afterwards. So Prem will take the user action option strategy. So today he is going to explain one option strategy. The PDF is already given in your handout section, you can download. So this strategy's PDF I have already put in your handout section. Download this strategy and he will be explaining this strategy. Over to him.
Good morning, everyone. Prem here. I'm going to explain you the option strategy, which is called covered call strategy with wide bear spread. Yeah, okay. This we're going to form for Nifty, and I'll be explaining you how to form this strategy first of all. Yeah, okay. First, we just want to buy future one lot. Whatever the current price, you can buy the future one lot, and go along with that, we're going to sell just in the money call option one lot. I'll be explaining in the demo also in our software. Before that, I'll be explaining all those things. After that, buy the put option strike, which should be greater than or equal to the future price minus the call premium you have received. So this call premium will be for this part. Whatever we'll be selling this call premium by, this will minus the future price. And sell the deep out of money put option one lot. Okay, this is how you need to form the strategy. Again, I will be repeating the same things. We're going to buy a future one lot and then sell in the money call option one lot, buy the put option, the strike, which should be greater than or equal to the future price minus the call premium you have been received, and selling the deep out of money put option one lot. Okay, now we have been known how to form this strategy. I'll be just going to demo you using our option strategy tool. Okay, you can move to our option strategy tool, where you can find the user action option strategy analysis here. You can just click on this, where you can find the instrument, symbol, expiry date. We're going to form this strategy for Nifty, right? So we just want to select the Nifty script code and select the expiry whatever you require. I'll be just forming this for this month August expiry. So after the selecting, you can just click on the load button. After loading, all those data will be loaded for this expiry. You can find this the strike, which means the underlying price for this future. You can just buy this one lot. Okay. Actually, you're just going to buy, and then you're going to buy the one lot for this one. After that, I already previously told that you go
In the money call
in the
option.
money
Just
call
in the
option. You need to sell the in the money call options. Just select the call. In the money, we're going to go with 17,650. We're going to sell this one lot. Along with that, we're going to buy the put option strike, which should be future price
660 minus 200.
660 minus 200. So it will be somehow around
450.
Yeah, okay, 17,450. Okay, we will be just selecting the strike and we're going to buy this one lot. Yeah, okay, again we're going to just sell the put option deep out of money where it will be somehow around 17,000. Yeah, okay, we're going to sell this one lot. Okay, again I'll be explaining you how it has been formed. Here is our future. We're going to buy this one lot. After that, we're going to sell in the money call option where we have been selected the strike 17,650 in the money call option, and we're going to buy the put option, which should be the strike, the future price minus this premium you have been received. So it will be somehow around getting 17,450. You're going to buy this one. After that, you're going to sell the put option deep out of money. You have been selected 17,000. Okay. After that, you can find out the number of days and user action 2 tabs where you will be entering the how many days you're going to hold this one and then your target. Okay, I will be just entering the number of days as 7, and you can just enter from 3 to 7, which will be the minimum of 3 days to maximum will be the 10 days. And the user target, whatever the target we will be thinking about it.
18,000.
Yeah. Here we will be thinking it will be an 18,000. So after this, we can find out several buttons here and be explaining each of these buttons, the use cases. Okay, here it has a calculate button. After clicking on a calculate, you can find out all those levels for this formed strategies below right over here. Wherever you can see the buy and trade targets, right? From there, all those things
Profit and loss
will be filtered here. After that, you can see the net Greek analysis. This net Greek analysis will show you the delta, gamma, vega, theta for the strategy whichever has been calculated given the price entry or targets. After that, there will be a Greek scanner. This Greek scanner can give you all the strikes which has been tradable in Nifty. You can find out this delta, gamma, theta, vega, IEB for all those things will be available in there. After that, the advanced price trend. You have in this one you can find out the monthly uptrend, monthly downtrend, along with also the consolidation zone and weekly also you can find out. Yeah. One by one I will be demonstrating you. Just click on the calculate button first. After clicking on the calculate button, here you can see the Nifty price is now currently at 17,650, but the buy and it has been showing as 17,832.2946. After you just buying this, the target levels will be this much, which means the first target, second target, and it has been keep on going. And your net investment will be this much. And however, when you have been investing, when you have been getting into the buy entry, you will be the net investment will be this much. And the same way for the sell entry also, it has been goes on. And okay, we have been calculated for this strategy. We're going to find this net Greek analysis for this strategy. Just click on this net Greek, where you can find all the delta, gamma, theta, vega, omega for whatever we calculated.
So here the net Greek analysis speaks about the entire strategy is Greek. It is not the Greek of only the future, or it is not the Greek of only call option or put option. So net of, like delta of a future buy is +1. Along with that, you have sold a call option, it will be negative 0 point something. So, and here you bought a put option, this too also a negative delta 0 point something. So put option delta always till -1 maximum it will go. 17,000 put option we sold. So negative delta converted to positive. So this is positive. So net basis, the net delta of this strategy is 0.2185. So once this delta is going on reducing in the uptrend, once the delta is going on reducing, we are getting the profits. Once the delta is increasing here, we are getting into the losses. So here delta increments are loss contributor, and when the delta is reducing, we are into the profit. So this is what you will be reading from this table. Along with that, so these profit and loss, whenever you are seeing, you will be seeing some extreme losses here. If it is coming to 16,500, you will be getting 27k loss. But if it is going to 18,500, which is the extreme case, your profit is 3,500. So as a option trader, once you form this strategy, you must see that my maximum profit is capped at 3,500. If maximum profit is capped at 3,500, I must not hold this strategy to beyond 3,600 if it is a 1:1 risk reward ratio. So that is, though extreme case it is showing you, but it is a good indicator. You should know that yes, extreme case I am not going to hold this strategy. If the Nifty fall back to 17,384, I can close this strategy and come out. So extreme case, if you can hold on, this strategy is going to give you a bigger loss. If you are going to hold this strategy to a maximum level also, it is going to give you 3,600. So I will not suggest this strategy to hold beyond 8,500 and all, because you can see 17,900 also you are 3,500 profit. You are initiating at this level, 17,800 also 3,200 profit, 17,900 also 3,500 profit. So this profit is not increasing exponentially with the growth of Nifty. So these strategies are very conservative strategy, should be taken for only for small gains with a small rise. You are at 660, at 850 level, book the profit. If the price fall back and come down to 17,487, book 500 rupees loss and come out. So these strategies, again I will repeat, it is a conservative strategy, should be taken because profit is not having a exponential growth. So from 17,800, whatever profit you get, the profit just merely increases by 400 points if the Nifty further move by 300 to 400 points. So there is no point in holding this strategy. Initiate at 660 level, 830 level, book the profit, or 487 level, book the loss and come out. So this is how you should take this strategy, but it is a very good strategy for speculative trades. If you need to do multiple trades and all, so this is a good strategy. It is well protected and it can give you a small gain but definite gain. Proceed.
Yeah, okay. We have been talking about this net Greek analysis. I has been explained to you all those things. You can next we're going to see about the Greek scanner. Where after clicking this Greek scanner, you can find the delta, gamma, omega, all the values, all those things for all the tradable strikes of Nifty for call option, put option, both the things you can find out here. So it will be useful for traders who has a very good knowledge about the delta, gamma, omega, thetas and all. Yeah, okay. Next we're going to go to the advanced price trend, where after clicking this one, you can see the major uptrend monthly and consolidation zone, downtrend for weekly also it will be given. Yeah, whenever in uptrend the Nifty hits 17,274, you can just click on that one. There it will be showing you the profit, which means you have been entered in this way. When the Nifty touches this one, your profit will be 2613. So in same way, if it is in a downtrend, you can just click on this one, then you can find out it also in the profit, which is 1208. So like this it has been goes on, and also the consolidation zones also here. You can find out the profit and loss for that one too. Yeah, okay. Like this it will be goes on for weekly also. You can just click on this one and find out all those things.
So here this particular tool is having a feature to give you monthly uptrends, monthly downtrends, weekly uptrends and downtrends. So you can say that there are two classification. Either market will be up or market will be down, or market will consolidate. So these are the three actions market can show. Market can go up, rise, or market can fall, or market can consolidate. Beyond these three, there is no fourth action by the market. So here, once it is going up, so what will be the trend parameters? So there are two parameters to see here. One is your weekly, another is monthly. Weekly, when I say it is from Monday to Friday. Post Friday, it is going to change. So if you see next Monday, this will change. So here, weekly, if you are seeing here, it is 17,622 to 734. So this is what we have seen. So this is Nifty future level. You have seen that yesterday itself 730 level it has gone. 736 it has gone. Yesterday's high was 17,736. So today also we are falling. So this is a consolidation zone. So only when if this zone is breakout, then only you can get the lower target or higher targets. This is what it says. So if it falls below 623, then it can go to 585, 549. If it goes above 734, then it can go to 771. So this is what the means weekly trend parameter will tell you. Since you have formed the option strategy, you must be interested to know what will be the profit of my strategy at this point if the Nifty comes to 17,622. So there you can't feed the price. You can just click it here. You will know that how much profit your strategy will get. Suppose you are saying that at 808, what will be the profit of my strategy? You just on every target, any one target you click, you will be knowing if you form the strategy, how much profit it will give at each level of this pricing trends, and market will respect these trends. So this is a very small strategy. Do remember the workout of this strategy also I have given in the handout section. Download it. And this strategy is a speculative strategy. Very quick speculation you have to do. Every 100-point rise or fall, you need to come out of this strategy, or you have to book the profit in this strategy. But very conservative strategy, small gain you will get or small loss you will get. The gain will not be too much or the losses will not be too much. So in this case, one thing you have to remember, you should not hold this strategy with a bigger price movements. And these are not recommended for 10 days, 5 days or so on, 2 to 3 days period. It is highly recommended. And one more thing you need to remember, these strategies will be beneficial when the VIX will be less than 20%. So currently the VIX is, India VIX is less than 20%. As long as the VIX remain 20% below, these strategies are beneficial. So we can create a clone and see how it has formed in the earlier month. So here you can say that if this is the strategy, then let me see the same strategy I have formed in the month of July, because we are forming today 12th of August. 12th of August I am that we are forming and saying that you take this strategy. If the same strategy would have taken on the 12th of July and kept till 26th of July, how much it could have given? That is a very interesting thing to see here. If the same strategy with the same logic, buying a future, selling a call options, just in the money or slightly out of money or at the money, whatever you can say, and buying a put option with the depth, future price minus call options, premium receive, and selling a out of money put option. This is your discretion. Any out of money put option, 500 point, 700 point, anything you can do. So we have maintained a 500 points. So that same thing I am doing here. If I would have initiated this same price strategy on 12th of July and held till 26th of July, then this would be my profitability. This could have given me near to 6,000 rupees profit. So this same parameter always does not hold good. If I could have taken the same strategy in the June, so I can clone this strategy. So testing a strategy is very important. You form a strategy, you need to know how it has performed in the month of June, how it has performed in the month of May. So this June, if you have found it, then futures could have been bought at 15,766 and call 750 call option, just in the money call option would have been sold, and this is how the put choice could have been. Then these two have also gone into the losses. You can see here there is a 400 point fall, we are into the loss. Once it has gone up and consolidated at 700 level, we got into profit. So here July you have seen there is a uptrend market, we got to a good profit. In June there was a downtrend and post which there is a recovery, so we enter into loss and come back to the profit. So this is for the month of June. Same thing if you can say for the month of May, we can clone this strategy and see so whether it has worked in the month of May. So here once you form any strategy, those who are the buyer of our software, I will suggest them any strategy you form. So there was a expiry was falling, that's why you are seeing it is a big loss it is showing. So because there was a expiry, so this whatever the options we have chosen, so 26th May that series has expired, so that's why you are getting a bigger value. But these two also 15,800 to 15,800 to 16,125, there is a 200 point uptake was there. The strategy has given 5 to 6,000 rupees profit. In fact, volatility was more in the month of May. In the month of June, the VIX was around 25%. So currently you are below 20%. So if you see past 3 months, it has given, if it is in the direction of the trend, as I said to you, if it is in the direction of your trend, and after you initiate, there is a plus 100 to 200 point movement happen, 200 point movement happen, then you are at a good profit. If there is a minus 100 to 200 point movement happen or more than that, you are at loss. So this is a conservative strategy, can be tested, can be taken based on the parameters. But more on this strategy, you can read on my book on the futures and options. So there we have explained it perfectly. So this is the option strategy the Prem has taken. And anybody has any query can ask me. Anybody has any query? So Nifty has reversed back, though we have sold into Nifty. Nifty top loss is going to hit 17,726 here. So what we have to do? We have to book the profit at 17,650 call option. We have to book the profit. We have to book loss in future. Future we have to book the loss, and then we have to buy the future here along with a 17,700 put or 17,750 put. So intraday top and bottom is getting hit in the last hour. You can expect the gap up action in the next day or gap down action in the next day. So Mahesh Saj is asking a very interesting question. All of you should listen to that. What is telling, if there is a intraday top or bottom is getting hit in the last half an hour of the trade, so either 38,644 comes or 39,245 comes. So what we should expect? Intraday top and bottom, if it is last hour 325, 320 level, if it is coming, then the next day will be a gap up or a gap down day. So that also is a very important thing you need to understand. So this is a very important thing all of you need to understand. So that is, we have calculated. So that doesn't mean that top and bottom based on our convenience it will come at 12 o'clock. That top and bottom can happen at 325 or 330. If it happens, there is no time left for the day. Next day there will be a gap up action or gap down action. But very carefully note down this intraday tops and bottom. This is a very strong indicator. Very strong indicator. So very strong indicator. So this need to be taken off very carefully. So same process. Also you can see here option. Those who are using the option trades, I will suggest them better use this advanced tool of our option scanner. First select the symbol, analyze all strikes, go for call options. You can choose any of these 3 options. Strike between buy entry and targets. Here all levels will change. Here you can see here. So now earlier when you have seen, it was coming 16,000 17,587. Now it is telling that 17,693 above the calls must be bought, and 17,639 below the calls should be sold. So this is the level. Note down, these levels are very important, and this is not a static level for the day. Every time it will change. So every half an hour, 45 minutes, based on the volatility, based on the internal market conditions, it will change. So you need to, those who are the call buyers, again I repeat, those who are call buyers, wait for the 17,000, and they are analyzing now. The two conditions. They should be call buyers. They will be analyzing at 10 a.m. of today. So for them, they must watch out for 17,693 above. They should buy the call options, or 17,638 below. 638 below, they should buy the put option or sell the call option. Anything they can do. So this analysis, once you are doing for the call option, same process also you can do for the put options immediately. So you can analyze for the put options. That too also you can get a analysis here, or else slightly for 2-3 points deviations will be there. So you can put buying should be 17,638 below Nifty spot level. So these levels are very important, because if these levels, if you are not given that importance, what will happen? Option trades will become failure. You can choose, you have all freedom to choose any kind of any strike of your choice, but that is not going to yield you the profit. Nifty, once it crosses 17,692, as per the 10-10 data, we must be a call buyer. And if it is coming below 17,638, then we should be a put buyer. So that will be our analysis. But morning, if you have taken the analysis, it was a different, and the spot has a triggered that, and we have entered in that things. Back Nifty we have not entered. Nifty future we have sold along with a call option purchase. Stop loss has not hit. We have to wait. We have to wait. If the stop loss hits, then we can reverse the trade. If it doesn't hit, then we can wait for that. 726 happens, means future need to be closed with loss. 650 call option, you have to book the profit, and at that time you have to buy the future along with a 750 put or 700 put. Download the presentations on option strategy. So we have explained you today one of the option strategy, how to initiate that strategy, how to backtest that strategy with that our backtesting tool, and also I have taken for the Nifty and Bank Nifty. And today, to remind, it is a trend reversal date which is falling today. So after achieving specific part, if the trend reverses and Nifty goes to the negative also, don't get surprised for that, because this is a trend reversal date as per two different methods. So till 3:30 we need to wait to understand or to know the actual happenings of this particular thing. So 726 level we need to reverse the trade, and similar way 968 level, 38,968 level, we have to buy the bank. So this is what we are going to do for the day. So next session will be on the Monday. We do not have a session because of holiday. So we will again have the session on 19th. So here we have again the sessions will be on the 19th of August. So 19th of August we have the session. So if you have not registered for the program, do register. And here also we are running a offer for the Independence Day for all our products. If you are interested, many of you have opted for that product. If you are interested, all our softwares are given at a 60% deep discount, including GST. GAN and 1SD software, it will have all entry level needs for you. It will satisfy. This also given at an offer. So full package also given at a offer. So if you are interested, book your copy before 15th. So 15th this offer is going to be get closed. So before 15th you take the actions. So with this I will be ending today's session. Thank you very much. Thank you for your time. And recordings will be given to all of you in the YouTube channel. Once you visit our YouTube channel, recordings will be there on the first two videos, 2 days recording we have given. So this recording also I will be uploading today. Thank you very much. Thank you for your time.